Good morning, traders. It is Wednesday, August 21st. Going to use the FinViz and StockCharts.com for charting this morning. I was changing my data feeds for eSignal. They expired and then getting them updated to some new ones. I still haven't got approval for the data, so I am falling on to FinViz and StockCharts. Hopefully this will get resolved today, but here we are taking a look at the daily charts of the major markets. We've got all the way to the Nikkei, Euro stocks, DAX, and the VIX. And if we take a look overseas, you look at the Nikkei, the Euro, and the DAX. They're all trading higher today, testing some recent highs. We're seeing Euro stocks actually breaking above this upper range and starting a breakout to the upside. Now, if we look at the U.S. equities, the Dow still trading quite a bit below this previous high. SP500 still way below it. NASDAQ below, and the Russell 2000 below, but they're all having a nice comeback. Yesterday, the market started to sell off. It actually had a pretty good sell-off after the closing bell at 4 o'clock last night, but it has muscled its way back, and we'll see how things go. Overall, the bias is still to the downside. We're still in a downtrend. The momentum is there. We're just waiting to see if the big sellers are going to step back in and crush the markets and go lower. And if we take a look at the SPY ETF here using stock charts, the type of price action we are in, this type of price action is very similar to these other price actions and potentially something bigger like this. We could see a much larger range and something continue a lot bigger with a potential bigger breakdown later. So that is where we are, and we're waiting for the market to, we are in a net short position with an inverse ETF, the SH. It's a one times, there's no leverage, it's just an inverse SP500 type fund. We're looking for a move down to the lower end of this range and then actually a breakdown. We're looking for this kind of follow through move, this type of follow through move to the downside. And that could be a new setup for a pivot low in the market to get long for some type of bearish formation. And we are anticipating a much larger sell-off going forward and a bear market to take place. But again, we trade shorter term time frames. We catch these trends because you never know when one of these little trends is going to turn into a bigger trend, which turns into the bear market. So we focus on the next shorter time frame, and it'll always get us in the longer term trend and the bear market or bull market, whichever comes next. So let's go back to FinViz here. Let's take a look at the chart of bonds. Money flowing out of bonds a little bit today. Obviously, if money's piling into stocks, it's usually coming out of somewhere, and the money's always rotating to where the investors or traders think there's the most potential. So they're moving out of the safe havens. We're seeing bonds lower. We're seeing gold and silver lower. That money is flowing out of those and into equities. Nothing significant with bonds, just down 1/4%, 1/10 of a percent or so. But if we take a look over at metals, you can see they're down a little bit more. Gold down 4/10 of a percent, silver down almost 3/4 of a percent, and they're just continuing their consolidation phase, which is kind of what we're expecting. More or less, they've put in this big high volatility spike we saw in the metals. And more or less, if we were to just kind of box that in, that is kind of the range they're going to be probably stuck in. And a breakout of that range will be bullish or bearish. But until then, they're going to continue to consolidate and take a breather. Now, yesterday we did see gold miners have a nice pop and rally. We'll see if they have some follow-through buying or what happens with the equities market. I do feel as though equities wants to roll over here and move down, and we should see money roll back into the safe havens. And with any luck, we'll see the metals pull back a bit more, give us another low risk entry point where it gets oversold, and we can potentially get into either gold miners or potentially into gold again going forward. Now, taking a look over at the US dollar real quick, here is the US dollar index, and pulling this up, you can see here, pulled back yesterday. It's testing up near these highs. We got a lot of highs over here. If we were to just draw a resistance line, we got a lot of highs through this whole area right over here. So it's been struggling, starting to pull back a bit. Obviously, if the dollar starts to come down, it'll help boost metals. If we look at the support trend line here, there is potential for it to continue to come down or at least trade sideways until it gets to this moving support trend line. It is holding at support at this point. It could still dip down. There'll be another level of support, really even down to this far in terms of price action. Somewhere down in here, we could see it pull back and chop around and build this base and potentially pop up. We do have a target of, I am still expecting 100 on the dollar. More or less been talking about it since back over here when we got down here. This was that perfect 100% measured move target. We got a big impulse move bounce, a bull flag, and then the second half of that move. So all this is pointing to $100 US dollar, which means there's still a lot of upside potential, which could somewhat mute metals, but eventually we are seeing metals and the dollar more or less move up together, but eventually when the dollar does top out and start to roll over, that's when metals are really going to start flying and take off and leave the station. Looking over at energies real quick here, we've got, let's take a look at crude. Crude, if we look at this chart, it's got some mixed signals. It is trying to break out today. We got this following trend line right across these highs, and it's just starting to threaten and break out here. Overall, we're going to have a lower end of this range around the 51 mark where it came down, tested these lows. We'll see if it can start to break out of this level. Obviously, a break of the trend line is the first early warning sign that it's starting to turn up. We're going to have resistance from this previous high. And then, of course, if it can close above that, then we could be off to the races. Obviously, every time it breaks one of these highs, we're going to see short covering kick in. So the closer there are highs here together, the more power you have on a short covering. One could spur enough buying to break the next one, which spurs on even more short covering. Longer term time frame traders, and it continues to break out, and you see a pretty big run. Of course, there's another going to be a level here, another level here. Now, I don't see crude going that high. I feel as though we're getting pretty close to a recession. I think if we do get any breakout, it'll struggle somewhere around the 60, 61 area and potentially come back down and trade in this range. So I don't think there's a whole lot of upside. I do feel as though if we get into the recession, we're going to see the 44 tested again very easily, which is this previous low we saw back in December, and it could even go much lower after that. But at this point, it is flirting with a breakout on a short-term breakout signal here to the upside. Looking over at natural gas, you look at the big picture here, continues to be in a downtrend. It's kind of flagging sideways here. This type of flag pattern is bearish. When the trend is down, you get into these bear flags where the market consolidates, and eventually we see another leg down in price, and that's kind of what we're looking and waiting for. We're hopefully going to see a flush all the way down to 2 or a breach of the 2, give us a buy signal. Seasonality for natural gas, meaning it's coming into a buying season here very soon. Hopefully we'll see a breakdown potentially September here, and give us a good opportunity to get in long for a move up. You can see what happened last September, or if you look at this previous bear flag, price moving down in price, and then it traded sideways here, and then we sold down, and this is what we're looking for, is a final move down, and then we could get into a nice big winter rally for natural gas again. Now, one other thing I was looking at last night, if we take a look at this is the SIL, but I mean, it's the same for the other miners. Let's go to GDX and GDXJ, just take a look at them. More or less, we are into, it's more predominant on the SIL, but overall, we are getting into a level here where we're getting into the type of volatility where we see markets put in a top. This type of volatility here is what we're starting to see again over here. And look at the volume of money moving in to the market. I kind of picked up on this last night looking at the bar chart indicator of the most popular ETFs. And if we actually go over to the bar chart, it'll show us this is the ETF's price volume leaders. Now this means more or less it's not about how much volume is traded, it's actually how much value, how much money was actually traded. And if we look at this, GDX was actually the number 3 top money moving ETF. There's more money moving in to GDX than everything else other than the SP500 and the NASDAQ, meaning everyone is piling in to the GDX. This is a very different view of looking at it, and this is what a lot of big funds look at. They don't actually look at daily volume. They want to see actually how many billions of money was moving in or out of an asset class. And if everyone's piling into gold miners, then it's kind of an early warning sign here that it could be near the end of the game here. I think we could still see miners push up, maybe poke to new highs. As you know, a lot of times we get these three surges to a new high. So you get a surge to a new high, a very sharp pullback, a new surge to a nominal new high, a sharp pullback. We could get another one. It's the third one where the market tends to break down and start to collapse. And we saw that happen over here, where this one was more of a bear flag formation that broke down and then went into a decline mode. That's just the way the market moves. And we could get into something very similar to that if the stock market breaks out of this range that it's trading in to the upside and starts a rally. Money's going to pile into risk on assets, which is the stock market. They're going to rotate out of the safe havens. And we are out of the miners in metals at the moment. Our protective stops came in. We got out right at the highs for for our gold play for about a 24% gain. We're out of the SIL. We took about a 6.5% gain on it. Now the market could chop around here, and we could see something very similar like this happen last March through June. We could see this type of sell-off take place. I know it's not what anyone wants to hear, but that's the reality that could happen if stocks break to the upside and rally. Miners, metals are going to sell off. And we're starting to see that momentum and that type of volatility take place in these sectors. And the fact that the bar chart analysis here is telling us that it is the number one hottest ETF where money is moving into. If everyone is moving into it, usually the move is almost done. I think we got to be very aware of that. And we're in position for a pullback in miners, and we are net short the stock market, looking for a pullback. But we just have a toe in the water because the market is really volatile. We don't know which way it's really going to break, and it's going to be a big break. So we want to keep our risk down with our position sizes, and we'll get on board when a new setup happens. It's not about catching every move in the market. It's about catching high probability moves and getting our little bit, getting out and resetting, looking for a new play. So let's keep our eyes peeled for potentially a big correction in the metals market if the equities start to break out and rally, and we'll be looking for some new trade setups. Anyways, that's it for now. Talk to you in a bit. Bye-bye.